Options trading requires a lot of time and effort to develop the skills that you need to be successful with options trading. So in today's video, I'm going to be giving you the top 8 skills that you need to learn in 2023 to become a successful options trader. The first skill is going to be the basics. So this is going to be whether you know the difference between a call and a put, the difference between buying and selling an option, and then you need to understand options data. So this includes the price of an option, obviously, but it also includes the Greek values, and it also includes implied volatility, which is basically the demand for a specific option. And then once you understand the options data, then you can move on to strategies and learn different strategies for different sentiments or which way you think the stock market is going to go. And you can choose different strategies for different sentiments. So in order to be successful, you need to understand all the different strategies to trade the markets in different directions. You can trade on the market going up, you can trade on the market going down, and you can even trade options with the stock market trading flat and still make a profit. So before you learn the 7 other skills, you need to learn the strategies for separate sentiments. And sentiment can be determined using technical analysis, which is the second skill that you'll need to learn to become a successful options trader. And technical analysis doesn't have to be deep. You can start out very easy just with price levels, RSI, and MACD. This is what I'm using about 90% of the time. But if you want to get more advanced in your technical analysis, if you want to go to the intermediate stage, then you need to start working on understanding IVP, or implied volatility percentile. This will tell you if implied volatility is relatively high or relatively low. I love to use this around earnings reports. Then you can start adding in trend lines, or you could add in volume profile, which will show you how many shares are traded at different prices rather than on a specific time frame. And if you really want to get advanced whenever it comes to technical analysis, then you can start adding in patterns like double tops or lower highs, lower lows, head and shoulders. And then whenever it comes to analyzing, you can do whatever my boy Lepton is doing over on Discord. Now, I'll never pretend to understand his technical analysis. That's way above my head. But even sometimes the most advanced technical analysis can fail you due to fundamentals. And in order to understand fundamentals of a stock or a company, you need to understand how to read an earnings report. So whenever it comes to an earnings report, the first thing that you need to look at when it comes out is going to be the income statement. This is going to include the revenue for the company for that quarter. It's going to include the operating expenses, or how much it costs for the company to continue running the business for the quarter. And then finally, at the bottom of it, it's going to include the earnings per share. And you're going to see GAAP earnings per share and then non-GAAP earnings per share, which is the difference between the standard way of reporting earnings and then adding in things like share buybacks and employee stock compensation. So that's the income statement, the first thing you want to look at. And the second thing you want to look at, especially right now, is going to be the cash flow statement. So the cash flow statement is going to tell you exactly how much cash that the company has and how fast they're burning through that cash, or if they're adding to that cash pile. So you want to look at the operating cash flow, or how much money the business itself is generating in cash. And then you want to look at the cash at the beginning of the quarter and then the cash at the end of the quarter. And if the cash at the end of the quarter is running low and they're burning through money like crazy, then that's probably not a company that you want to invest in, especially right now when capital is everything. And the reason why capital is so important right now is because the economy is kind of going down the drain, and in order to understand that, you need to understand economic data, which is the fourth skill I'm going to give you. Economic data is probably one of the most important things to understand in the stock market right now, and you don't really need to understand too much of it. The main things that you need to understand are inflation measured by CPI and core PCE. You need to understand how to read a jobs report, which will include the JOLTS job openings as well as the initial jobless claims. And then less important things would include the Michigan Economics Report, the Purchasing Managers Index, and hourly earnings. So these few events have less importance to them than inflation and the jobs report. And then the least important is going to be things like the trade deficit and, at least for right now, housing data. Nobody really cares about housing data whenever it comes to the stock market right now, but all of these things are subject to change. The markets can always adapt to care about different things. So you have to keep your head on a swivel, and you have to keep reading these economic reports and understand what each one means and how they'll affect the stock market. Luckily, you don't have to do a ton of research. Investing.com and their economic calendar will do a lot of the work for you. So go check that out. You'll know exactly when each report is coming out, whether it's bullish or bearish, and you'll even see the Wall Street estimates versus the actual report. So super useful. And the data that comes out of these reports is going to help to form the sentiment for the stock market, which you need to understand. So you need to understand what data is good, what data is bad, and use this in combination with technical analysis using things like RSI, which will tell you if a stock is bullish or bearish. Or you could use MACD. Whenever it falls below 0, that's bearish, and whenever it's above 0, then that's bullish. And of course, you have trends, so if there's higher highs and higher lows, then obviously that's bullish. So using the econ data as well as the technical analysis will all help you to form a sentiment, which you can then use to choose a strategy that you need to trade for the stock. And another important piece of understanding sentiment is going to be to read headlines. And I know none of us love reading the news, but it's an important part of trading. Reading the headlines, maybe diving a little bit deeper into the articles, because headlines are always a little bit shady these days. But the news helps to form the overall sentiment as well as technical analysis and economic data. And the sentiment for a stock or for the overall stock market can shift extremely quickly. And this is where risk management comes in handy. You might find yourself holding on to a bullish trade, but then suddenly the stock market turns bearish because of some economic data coming out, and you want to get out of that trade as quickly as possible. So you have to keep an ear on the ground, and you need to understand when to cut your losses. Now, the way that I cut my losses is based on mental probabilities. So I give myself an estimate of what is the likelihood of this trade going for me or against me, and then I set a limit order accordingly. Now, if you don't understand mental probabilities yet, then you might just want to stick with setting a percent stop loss that you want to get out at. So maybe this could be 10%. That would be pretty low whenever it comes to options, so maybe you could increase that to like 20 or 30%, and this will help you to manage your risk and cut your losses whenever there's huge sentiment shifts. Another important piece of risk management, though, is hedging your position. So not just taking on only bullish positions. Sometimes you want to mix in some neutral positions or even add in some bearish positions. You want to get to as delta neutral as possible, which means that whenever the stock market goes up 1%, your account just stays flat. And then you can take advantage of the market shifting if you have different sentiment trades. So if the stock market goes up and you have a bullish position, then you can take profits on that bullish position. And if the stock market shifts, then you can take profits on the rest of your positions that you might have open. Hedging your positions is a great hack to make a little bit more profit. And the last thing that you need whenever it comes to risk management is to avoid your expiration date. And the reason for this is because expiration dates are binary. Either your option is going to expire in the money or your option is going to expire out of the money. And if you're trading spread options, which I love to do a lot, then this is a binary event to where you're going to either take max profit or you're going to take max loss. And for me, most of the time, I'm taking my max loss when I'm holding an option into expiration, which is why I haven't held many options into expiration over the last couple of months, and this has saved me thousands in losses. This is something that I always struggle with, but then I saw it right in front of my face, what was happening, why I was losing money, and I found out that it was all about holding these options into expiration, and then I set a plan to get out of my options before they expire between 2 and 3 p.m. on my expiration date. That way, I know now I don't have to hold the options into expiration, and I don't have to keep taking my max loss. So I set up a game plan, and I make sure to stick with that plan most of the time. Now, obviously, you're not going to be 100% whenever it comes to your plan, because sometimes plans just fail you. But as long as you're able to stick with it 90 or at least 95% of the time, then I would say you're in good shape. And the thing is, even with this game plan that you have set, you are going to take losses. That's just part of the game. But you shouldn't let those losses be the reason that you quit trading. Instead, you should take these losses as a learning experience, and you want to be a student for life. Each trade that you take on, whether it be a win or a loss, should serve you as a learning experience as to what you can do better next time. And the thing about learning from these trades is, in order to learn from them, you actually need to log them, because what doesn't get measured doesn't improve. So I like to keep a nice little spreadsheet. That's the way that I do it. I am coming up with an app soon, so hopefully I'll have that out over the next couple of months, which will automate this process for you. But as long as you continue to track your trades in some way, you'll be able to learn from them. And in order to really improve your trading, you have to be in this for the long term. Again, you have to be a student of life, so you have to be trading for years on end and not give up after, say, a couple of months. If you give up trading after a couple months, chances are you probably won't make any profit. But if you continue to do this for years and learn from each trade, then you're going to compound your skills and become the best trader that you can be. So keep learning with each trade, discipline yourself, stick with your game plan, know when to cut losses and when to hedge your positions, learn about sentiment and what shifts the sentiment, which can include economic data, earnings, and technical analysis. And now you have all the skills that you need to be a successful options trader. Thanks for making it all the way to the end of this video, and thanking all my patrons for their support. And as always, remember to stay positive, stay green. I'll catch you in the next one. Bye, guys.